Really thrilled to see all of you. Raise your hand if this is your first Hub Week experience. Newbies, welcome. Welcome to the club. Excellent. So this is actually our 5th anniversary. I am really pleased to be a member of the board. Hub Week was founded in 2014. It is a partnership between the Boston Globe, Harvard, MIT, and MGH. And we're really thrilled to be down here in the Seaport with all of you. Hub Week is about shining a light on what's happening in Boston. We think that there's some really amazing stuff here, and we want to shine a light on what's happening at the intersection of art, science, and technology. Now, this is our annual fall festival, but we also do things through our Open Doors events that are a one-day event where we go into a community and explore what's happening there. We also have curated conversations where we feature a change maker in the city and bring together a whole community of change makers to talk about all the great things that are happening here. Now, this afternoon, we're gathered for a LEAPS talk. Now, this is the second LEAPS talk. LEAPS is by Bayer. Today's session is titled Impact Investment and Biotech. Where are the impact unicorns? I'm going to be joined by Greg Schell, Managing Director of the Double Impact Fund for Bain Capital, and Reshma Shetty, President and Co-founder of Ginkgo Bioworks. But first, I'd love to introduce Jürgen Eckhart, who is the head of LEAPS by Bayer. Jürgen, why don't you join me up here? And LEAPS by Bayer brings a brilliant mind.
Welcome, everybody. Excited to be here. I hope you can hear me okay. LEAPS by Bayer is an initiative that we started a few years back with the aim of solving 10 of the biggest challenges that we as humanity are facing in the areas of health and agriculture. We call these challenges LEAPS. They are all focused on either going, in the case of healthcare, going from therapy to cure, or in the case of agriculture, actually to reduce the environmental impact of our food supply chain and go to a more sustainable way of farming. While some of these challenges or leaps seem super high risk today, maybe even impossible, we feel responsible to basically pursue them anyway. To that end, we have funded a number of startups and joint ventures and have invested actually close to $1 billion over the last few years in companies that are trying to cure cancer, for example, or trying to restore lost tissue function, or in the case of agriculture, and maybe important to call it out, we have created a joint venture together with Ginkgo Bioworks. The company is called Join Bio. It's located right here in the Seaport, and the company is really trying to reduce the environmental impact of farming. With these LEAPS talks that we are hosting, one of which today here in Boston, we are really trying to foster a dialogue with a broader community around biotech innovation, opportunities, risks, and ethics. We are very excited about today's topic, which is biotech investing and impact investing. We feel very passionate about measuring the success of our investments, not only in terms of financial returns, but really also looking at return on humanity or impact. So we are thrilled to have like-minded leaders with us today, with Kathleen, Reshma, and Greg. And I think I will now hand over back to Kathleen, who will introduce the panelists. Thank you.
All right, Jürgen, thanks a million. He's tall. All right. So next up, it is my pleasure to introduce Reshma Shetty. Reshma is the co-founder of synthetic biology company Ginkgo Bioworks. I'm sure everyone's heard of that, which was actually founded at MIT in 2008. Ginkgo's mission is to make biology easier to engineer. Reshma has helped to grow the company to 260 people and raised $450 million. In October of 2018, Ginkgo launched Bioworks 4, its fourth-generation facility for design, fabrication, and testing of custom-designed microbes and mammalian cells. Ginkgo is concurrently engineering more than 50 organisms to spec for customers, and Reshma's going to now tell us all about it. Reshma, join us here.
Thank you. It is a pleasure to be here today. I love Hub Week. It's such a great celebration of all that Boston has to offer. So many thanks to Jörg and Karen and Kathleen for the invitation to be here today. So I'd love to tell you a little bit about what we do at Ginkgo. We're really passionate and excited about designing biology at Ginkgo. So let me see the slides. Bingo. Okay. So we're just down the street in the Seaport District. Have been here for about 10 years now and love it here in Boston. And what we sort of think about day to day is biology, right? And so I'd like to sort of start by showing this picture of a desk. And what I like to ask folks is, what do you think is the most sophisticated technology on this desk? I've sort of given away the answer already, but... That's right. Nailed it. So if you think about all of the different technology on this desk, the only piece of technology that has certain innate capabilities that are unique is really the plant, right? The plant is capable of self-repairing. It's capable of self-assembling. It's renewable. It can self-replicate, right? These are capabilities that your iPhone wishes it had, right? Every other engineering discipline can only dream of these capabilities, but biology has it innately, right? We take it for granted, but the house plant that sort of is sitting in the corner of your house dying from a lack of water, like it can do all of these things. And so for us at Ginkgo, what we're fascinated by is how do we harness all these capabilities, right? Because biology is the most powerful manufacturing platform, how do we learn how to harness it, how to program it, how to design it? And what's so cool about biology is that at its core, biology is in fact digital, right? The A's, T's, G's, and C's, the sequence of DNA of an organism, dictates how that organism behaves. So if we can figure out how to design the genetic code of the organism, if we just can figure out how to program those A's, T's, G's, and C's, then we can make the organism do new things, right? Have new functions. Now, this is a very hard programming problem, right? We're not very good at it, frankly speaking, today. But if we can get better at it, then we can harness all those capabilities that I mentioned to you before. So I think there is hope for us getting better at engineering biology. It's what we think about every day at Ginkgo. And there's two key trends that are sort of underpinning our ability to program biology. And they are really the reading and writing of DNA, right? So when it comes to reading DNA, I'm sure a lot of you have probably heard of the sequencing revolution, right? We can now sequence a human genome for less than $1,000. All of those technology advances have really culminated in our ability to sort of go out into nature and read the genomes of organisms, right? And so we can see, okay, here is the binary code of the organism, and here's how the organism performs, which means we can start to try to figure out how particular sequences lead to particular functions, right? Now, at the same time, a lesser-known technology that's also improving every day and every year over year is the writing of DNA, right? DNA synthesis. And in particular, our ability to synthesize gene-length fragments of DNA is getting cheaper and cheaper. We're now just over a cent a base pair at this point, so a cent per letter, right? So these two key technologies are both improving at an exponential rate. That dotted line I'm showing you on the graph there, that's Moore's law. That's the rate at which our computers are getting better. And so you can see that the improvements in DNA sequencing actually puts Moore's law to shame. And so with these two key exponentially improving technologies, our ability to engineer organisms has therefore also been improving year over year. So this is the plot I'm showing you, this showing the number of genetic engineering operations that we're doing at Ginkgo every month. Right? And you can see that for the past roughly 5 years, we've been exponentially increasing the amount of genetic engineering work we do. right? Now, to be clear, we're not exponentially increasing the amount of dollars we spend or the number of people we have at Ginkgo. So these are all of this improvement is driven by technology advancements, or the vast majority of it. And so by leveraging the power of DNA sequencing and DNA synthesis and those exponentially improving technology trends, we can exponentially improve our ability to engineer our organisms. We still have a long way to go, right? We're not done yet, but we're on a really promising trajectory in terms of our ability to eventually be able to program organisms to spec. So what does this mean? For us, at Ginkgo, we're a platform company, right? We think about how to get better and better at genetic engineering. And what we see ourselves is as building the back end of the bioeconomy, right? So this session is all about impact investing, right? So at Ginkgo, we're not a financial investor. We don't invest dollars into other people's companies. What we do is invest access to our platform that is getting better exponentially year over year and is improving our ability to program organisms. And so by providing other companies access to our platform, they can go and realize some of the impacts that biotechnology can have out in the world. And so I want to talk to you about a few of our companies that we work with and how they're leveraging our platform to deliver impactful products into the marketplace. So the first I want to mention is one that Jörg already alluded to. This is a joint venture between Leaps by Bayer and Ginkgo Bioworks. It's a new venture called Join Bio that's about a couple years old at this point. And Join is really interested in the problem of nitrogen fixation. Specifically, as you might know, when we grow crops in this country, we use a lot of fertilizer to grow those crops. And fertilizer is incredibly energy intensive to make, and when we put all this fertilizer down in these fields, we get runoff into rivers and whatnot, and we have a lot of concerns about nitrogen contamination, right? And so if we can figure out ways to just reduce the amount of fertilizer used, not even eliminate it, just reduce it, it has the potential to have a huge impact in terms of the environmental footprint of agriculture in this country and around the world. And so Join is working on engineering microbes that can fix nitrogen so that we can reduce fertilizer usage. And so this is an example where folks like at Bayer, who know a lot about ag and know a lot about bringing new products to market to farmers, can partner with Ginkgo's synthetic biology platform to bring innovative new products that have the potential to be hugely impactful in the future. As another example, some of you might have heard of the Impossible Burger. Has anyone had one yet? Yeah, they're pretty good, right? Not bad, right? Probably one of the better veggie burgers you've ever tasted, I'm guessing. What's fascinating to me about Impossible is that they're incredibly interested in how do we make our food supply more sustainable, right? And one of the things that distinguishes the Impossible Burger from prior veggie burgers or sustainable alternatives to meat is that it actually tastes good, right? And so the key thing that makes the Impossible Burger taste so good is that there's a protein in the Impossible Burger called heme, right? And basically heme is what helps make the Impossible Burger bleed, quote unquote, right? And taste actually something like meat, right? And it turns out that these animal proteins are characteristic of milk and characteristic of eggs and all sorts of animal products that, frankly, I still really enjoy eating. But they're what confer the taste and the mouthfeel and all the things that we enjoy as consumers, right? And so we spun out a new company called Motif that is focused on bringing these new animal protein ingredients to market so that we can enable the next Impossible Burger in the future. So we'd love to see a whole portfolio of products like animal-free milk, animal-free eggs, and new versions of the Impossible Burger come out based on ingredients from Motif and enable this transition towards a more sustainable food supply. We also partner with a company in San Diego called Genomatica. Genomatica is really interested in bio-based manufacturing methods for intermediate chemicals. So a lot of the plastics and materials you see around this room come from a barrel of oil. If we can transition that to bio-based manufacturing, again, potential for huge impact in terms of reducing our reliance on oil and improving our environmental footprint of sort of all the materials we use. And then as a couple of last examples, we have been recently expanding into the therapeutic space. And so we recently acquired a genome mining platform from Warp Drive Bio, a local company in Cambridge that's now part of Ginkgo. And we're doing work to discover new antibiotics to treat multi-drug resistant infections, which is, if you've read in the news, is a huge issue today. Okay, and with that, thank you very much for your attention, and I look forward to the Q&A.
Thank you, Reshma. All right, so I need Greg Schell up here. Hi, Greg. Come on up and join us. Greg. Yeah, come on. We're going to go sit over here and chat. All right, but let me tell you who Greg is. So Greg is with us from Bain Capital. He's managing director there. Prior to joining Bain, Greg served as a lead portfolio manager of global equity product at GMO. Before that, he was a senior equity analyst at Columbia Management Group and a consultant at Bain & Company. Oh, you're an MIT grad. I didn't know that. He got his BS from MIT and MBA from HBS. Greg believes deeply in the transformative power of education and the innovative capacity of the private sector to help provide solutions to society's most pressing problems. Welcome, Greg. All right, excellent. So we heard from Reshma.
I wouldn't be insulted if every question went to Reshma, actually. I thought that was amazing, so thank you for being here.
Thank you.
I'm not going to make an HBS joke on that one, but but no, you are going to start us off because so this panel is about impact investing. And so we're going to get to talking about impact unicorns in a second, but I actually want to level set a little bit. So I wonder if you could, for us, define impact investing and talk about how it's different from traditional investing.
Yeah, and thank you all for being here. It's good to be here again this year. The whole predicate for impact investing is really the idea that using private capital to solve society's most pressing problems has been sort of underutilized, right? A lot of our most pressing problems have been funded at some level by philanthropy and by government. And we believe that the private sector has maybe not always carried its weight. And so the whole field of impact investing challenges that notion that companies can only exist to make profit, and says that actually many of our most pressing problems, like access to clean water, housing, transportation, lend themselves quite nicely to the power of private capital. And so what we did was sort of start our journey 3 years ago to raise a pool of private equity capital with really a dual mandate. On the one hand, we promised commercial levels of private equity return on the one hand, but also meaningful and measurable social impact and/or emphasis on the environment. And our idea was that by buying companies and help them to scale, we actually stood our best chance to help address some societal challenges like climate, like access to water, like access to affordable health care. And so we've done 11 deals so far, each of them with their own sort of impact story. Lots of these companies would be attractive, of course, to other private equity investors. But our difference is really the intentionality with which we make our investment, and then also the operational additionality. So we're doing things with companies and making them emphasize things to help them become more responsible businesses, as well as to emphasize ESG metrics on their way to being a different kind of company, and to put them in position to, of course, have the kind of social impact that we aim to have.
Cool. So I want to talk about the metrics, and I want to talk about how you're measuring. But first, I want to ask Reshma a question. How are you feeling? How are you getting this question when you're talking to investors? Do you feel like they're asking you about impact, or is it very much about returns?
That's a good question. I think on the investor side, I think that probably there is more interest on the financial returns. I think where the impact comes in is really when you're talking about like the team, right, and prospective additions to the team. Like most people want to work on something that's important, right? People are usually no longer satisfied with just a job and a paycheck anymore, right? And particularly if you're taking a whack at really hard problems. And so what we've found is that the story of Ginkgo and these applications are really key in terms of attracting the best talent to Ginkgo, which is ultimately in the investor's interest because that's what contributes to our financial success.
Cool. So, Greg, actually, now back to the metrics. Is talent development one of your metrics in thinking about?
I would say that the answer is yes, but each of our businesses, of course, carry different business models, and so we measure different things in their operations. But what they all do, though, is take the B impact assessment. And for those of you not familiar, the B Lab comes up with the sort of B impact assessment, a battery of sort of self-reported survey metrics, that we all deem to be in accordance with responsible business. If you didn't have a woman on the board, that would be scored, and then you now will. If you don't have a diversity policy, that would be scored, and you now will, to drive up that score. It allows companies to think about how they recycle, how they develop employee satisfaction, where they have independent directors. So lots of things that comprise sort of what you would think of as responsible business would be scored. And so we take note of these things at inception of all of our investments, and then really relentlessly try to drive those metrics higher every year. So our measurement philosophy is really both the operational side to manage what companies actually do, but then take stock of all the things that they could do if they were trying to meet a much higher bar in terms of societal impact, and then challenge them to drive up the score on all these different metrics. So it's quite a robust, philosophy by which even a healthcare company could pay attention to its water usage, right, or its ability to, help low and middle skilled labor move up by helping them upskill. So these are the things that we would approach all of our businesses with as we begin to measure their impact.
That's really cool. Do they track with the Sustainable Development Goals?
Oftentimes, yeah. I think
Yeah.
the SDGs
Yeah.
are things that sort of are uppermost in our mind and align well with our philosophy as a fund. We don't explicitly call them out as the reason why we make an investment, but they align quite well. And of course, they care about the same things that we all care about, sort of anti-poverty measures or climate or education and so forth. So that's the reason why we started this fund 3 years ago.
That's really cool. Let's see. So we're talking about biotech in this session. And on the sheet here, it tells me that biotech is extremely risky territory. That's sort of funny, especially for early stage initiatives. And that's actually probably true. When a proof of concept or trials are successful, there's ample financial awards. But the likelihood of failure is pretty immense. So one of the main reasons why what do impact investors feel about biotech? Like, is that, like, you're probably balancing the impact with the risk? Do you pay special attention to biotech firms versus other firms?
For me to first one? Yeah, so it's interesting. So healthcare broadly, and the access to healthcare is as impactful as any other category. Health and wellness is a big piece of our franchise as investors. I would tell you, in general, we're looking at healthcare services, and in particular, investing in providers as our way to interact with vulnerable parts of the community, be it people who are Medicaid funded and low income, or the elderly, or sort of people with disease states that are vulnerable. So that's more of what we focus on in general. I would tell you that we have a life sciences business unit at Bain Capital that is exceptional. We together made an investment in 4 drugs alongside of Pfizer. It's an interesting story. This business is called SpringWorks, and Pfizer approached us basically to ask if we'd be interested in buying these 4 compounds. Were we not to buy them, these were research projects that were going to get shut down, actually, for the fact that they weren't going to be blockbuster drugs, which you need as a big pharma company to pay for the overhead. We had the unique idea of sort of buying these 4 drugs, which were for rare disease, and for small indications. So people need these drugs. But of course, by standing up a small business, you don't have the overhead that you need if you're a big pharma company. So they were willing to sell us these drugs, and we've developed them. We turned those 4 compounds into 8, including some oncology drugs. It's actually been an incredibly successful platform. And I think what we were attempting to do was maybe raise our hand and say to other big pharma companies, this company could be actually the platform for drugs that you might shut down or you don't think are large enough to continue to fund in terms of your research, and really be the company that could deliver access for these really important drugs for people with rare disease or for these small indications. So we're early in that journey. We've made that investment 2 years ago, but the people who watch Biotech would know that it went public a few weeks ago. Highly successful. So that's an example of the kind of thing that we did with our life sciences team. That team, complete with our flagship fund, the large cap fund, bought some other drugs, some CNS drugs from Pfizer, really on the backs of this successful relationship. And that was something like $1 billion transaction. So I think you'll see impact investors play all over the spectrum of healthcare. Biotech is probably designed to be done by specialists, and people who really understand, Reshma's presentation. But you'll likely see more of us play with providers who are providing direct service. But Biotech will certainly be a part of that mix for some investors.
Cool. So biotech, we think of healthcare, but Reshma, you're actually all over the place in different sectors and hitting different places to make an impact. Can you maybe double click on some of the things that you talked about in your presentation and talk about the impact aspects of them?
Yeah, I think for us, historically, biotechnology has always been thought about in relation to human health, right? And so that linkage in people's mind has always been really strong. But what we're seeing is that there's lots and lots of applications of biotechnology across industries, whether it's consumer electronics, agriculture, food, et cetera, and of course, human health. And so what we're excited by is bringing these technologies across to every industry, because we think that every industry has the potential to be transformed with biotechnology, and it can basically help foster a transition to more sustainable approaches.
Awesome. So let's talk about this double unicorn topic. Basically, it looks like the definition that we're getting for what is a double unicorn is $1 billion and impacting 1 billion lives. Like, is that a thing? Has anyone heard of double unicorn before? Okay, good. I was worried.
I have not, but now I'm super excited to do this.
Yeah, now I'm really super excited about it too. And I said, how did I miss the double unicorn thing? So that's really cool. So we're going to start a thing here at Hub Week. You heard it here first, the double unicorn. So let's talk about that a little bit. Reshma, where do you think, if you're thinking about, wow, we're a $1 billion company, we could be a double unicorn if we hit 1 billion people, what are the first couple things you'd try?
It's a good question. Yeah, I mean, I think for us, some of the examples I talked about in my talk, I think have the potential to sort of really scale out. Like if Join can pull off engineering a microbe that can basically help corn grow with less fertilizer. I mean, you're talking about feeding, a large cross-section of the world in a less energy-intensive way. I think that does have the potential to impact, 1 billion people, just simply in the reduced environmental footprint and the impact and the implications that would have for having a more sustainable food supply. So,
cool, Greg. Where would you put your money on if you were trying to build a double unicorn?
I was thinking to myself, these were interesting questions given that we just heard about double unicorns for the first time. I think there are a couple things that are probably universally true. One of them is something like the food supply, driving sort of access, especially to the base of the pyramid, stands you your best chance. I think the water space, and providing clean water stands you your best chance. I think access to really affordable healthcare, and I'm talking about basic, access, immunizations, and so forth. All of these things would be highly valuable things commercially to do, but by making them available to lots of people, affords you that opportunity. I might say, though, and not to challenge the question, but I would say the exciting thing isn't just to concentrate, all that value in one company or even one industry, but really allow, some of these methods for impacting people's lives to proliferate. I wouldn't mind if there were 100 companies affecting 1 billion people and to see sort of value distributed across them. So for me, the idea of a double unicorn is probably less prominent in my mind than to see new ways, of improving, the sort of lives of people. Because it's still the case that, half the world lives on, a dollar a day or something like that. And I think sometimes in advanced economies, and especially like places of Boston, you know that intellectually, but you can really lose track of what that means. And I think the reason why it's so important to work on is for the fact that just on birth, by the accident of your birth, where other places in the world, your life's chances and your standard of living aren't just like a lot worse, but like dramatically worse, where you're so far below subsistence living as to be threatened and to be unable to thrive. So some of these sort of tech-enabled approaches or abilities to drive access to people is really the idea, whether or not the sort of value collects in one place. So for me, those are some big areas where you're likely to see lots and lots of value created for commercial enterprise and for people and communities. And I think, for me, that's where I tend to think, most. Then finding the sort of best companies among the lot is really important, in part of our job as investors. But for me, it's really the billion lives that you want to have affected, not just to see a company, sort of have the value for themselves.
No, that's great. So we're going to have a whole herd of stallions and ponies and all kinds of different. Okay, so that's great. So let's talk a little bit about this idea around triple bottom line, the idea of people, planet, and profit. So is that, you're doing that as a business right now, but do you think that we can do that in scale? Do you think that we're going to change the way that VC investing is done? Are we starting to see that at all? Either one of you grab that question?
Sure. Yeah, I think, one of the things we're seeing is that more and more rank and file employees of, say, big technology companies or big biotechnology companies, they care about what the company they work for stands for, right? And so there's an expectation that companies sort of take positions, even on issues that you might never have imagined they would take positions on just a decade ago, right? But it's because people are aware that they have a voice, right, as a member of the company, and they have an opinions, and so they want their leadership and the company to sort of be a force for good in the world, right? And so I think that the drive towards a triple bottom line is actually going to come again from competition for talent and for people wanting to have the best folks, and the best folks are going to want to work at the best companies who do put people and the planet on equal footing to profits.
Awesome. Greg, what do you think about that?
Yeah, it's interesting on the one hand to see how many sort of impact unicorns will be created, as it will be to see how many unicorns acting more impactfully. And so there will be companies who are regular way software businesses who, just as Reshma has just pointed out, are behaving differently than they would have. And that's just, you can see in sort of sometimes imperceptible changes, which I'll talk about in a second, and sometimes really step function changes. It was probably acceptable, 80 or 100 years ago to have child labor. It's not today. It's probably acceptable sort of 30 years ago, to pollute a river with your sort of, waste products in your manufacturing process. It's not today. It was probably acceptable, 6 months ago to not have a woman on the board. It's not today. And you see sort of these changes, but one of the most revelatory things, for me regarding your question, how about just several weeks ago on the Business Roundtable, challenging the notion of shareholder primacy and saying that we as a group will stand for a broader, array of sort of priorities beyond shareholder, profit. That is wildly different than the world that we've come. You do sense that people are saying these things while trying to convince themselves that it's true, and we'll see to what extent they actually act that out in their businesses. But even to say those things out loud, I think, is worth attention. And I guess what I'll say is the sort of, coup de grace here, if you will, is really to truly understand that making this kind of impact is the way that you actually create a sustainable long-term business where profits can reasonably help. If you'll permit me, I usually give an example. For anybody who's studied markets in their lives, there's a sector of the economy that's delivered more shareholder value than any sector. I see one of my ex-colleagues in the back, so I think he knows the answer to this. But any guesses on which sector, subsegment of the economy has created more value by capital gains and dividends reinvested than any other? I'll just take one or two guesses. Anybody? Education? Not education. Anybody else? Energy. I usually hear technology. Absolutely not, right? You sort of have a winner and lots of losers. Energy, you would think it would be interesting. Energy is one of the most value destroying, businesses empirically. It's really tough to generate energy. And this is not close. By far and away, it's tobacco. Like, it's not close. You sort of have tobacco, nothing, and then you have like CPG companies, like, basically food. And this is true nearly for any time period that you look. Like rolling periods of 100 years, 50 years, 20 years, 10 years, like tobacco has been the most value creating sort of sector in the economy. Let's think about that. That's also having been sued for many, many tens of billions of dollars, right? Every state has a big rainy day fund full of tobacco, lawsuit capital, right? So it's remarkable how much value it has. When you think about Philip Morris, they've been a big company for a long time, on a declining number of people who actually smoke. It's a remarkable story. When you think about a societal angle, though, for how many early deaths, and my mother was a smoker, this is not a value judgment at all, but you think about sort of early deaths and sort of how it's driven up healthcare costs and the sort of loss of productivity and so forth from the health challenges that society has to bear, and you do a different kind of math, you really do understand that this has been hugely value destroying. So for people who believe in shareholder primacy, you might point them to that and say, if tobacco is so value creating, why don't the whole economy, be that? Why don't we tear down, houses to build more tobacco farms, since it's such a valuable enterprise? And of course, it's true that would be a disastrous thing for any society. But we've become used to doing math in a particular way that convinces ourselves that this is actually valuable when it's massively value destroying. So as impact investors, we're trying to really come around to a different way of thinking and look at a broader array of societal impacts, both positive and negatives, and really measuring that externality. I think the carbon-based energy environment is going through that today, where we'll come to see these things aren't optimal and sometimes they're very damaging. So all that said, thank you for indulging me to listen to that. But what I would say is that in the end, that's what impact investing is trying to achieve. And because society has so much upward pressure for businesses to begin to think differently like that, you then have a business roundtable saying, yeah, we care about all these other things as well. And we'll see. But 10 years ago, you would have never heard a body like that speak the words that they're now beginning to speak.
No, and thanks for telling us about tobacco. That's really interesting. So I'm going to open it up to questions in a minute. I've got one for Reshma, so be thinking about your question, and we've got mics in the audience. But first, Reshma, tell us some advice for founders. So you've got a company that you founded 10 years ago, and now you've probably learned a lot. So what are some advice for some founders out here?
Yeah, it's a good question. The thing I like to tell founders is that, founding and running Ginkgo has been a wonderful experience, but it's also been a tremendously hard experience, right? A huge growth opportunity, but, pretty stressful at times. And so what I like to tell people is that if you want to start a company, that's great. That's awesome. I highly recommend it. But don't do it for the money. Do it because you have a problem that you're passionate about solving. Do it because you have a mission that you want to rally behind. Do it because you see a need out there that you want to go solve. Because, the startup, it might succeed, it might fail, you never know. And so what you want to be able to do is say to yourself, however long later, whether it succeeds or fails, you're happy you took a swing at that really tough problem.
Cool. Questions? Back there. Great, there's the mic.
Hi, thank you for the presentation and the talk. My question in terms of impact investing is really, we talked about the metrics for the go-forward company, right? What that looks like for the good that you're doing. What's the responsibility in understanding where the source of funding comes from and potentially the negative impacts that previous funding may have had? Is it a total sum that you're looking at, or is it really just the new venture?
Yeah, I think it's an interesting question, and I think it's a nuanced question, right? I think in many ways, you don't change yesterday's capital allocation very easily. I think what you can do, and what we have to do as investors, as consumers, is really, sort of think about, today forward, how to sort of, have a positive impact on the context as we find it. So it's absolutely true that being very sophisticated about metrics and measurement is how you really understand the impact of the capital. We think about that not just at the level of the company, but also the portfolio. I think increasingly we're starting to think that about that as a firm. But it's sometimes getting to that level of granularity can confuse you and create different kinds of incentives. I can remember when we raised the fund 3 years ago, people actually kind of assumed that we'd have some impact. They were really concerned that we wouldn't make commercial rates of return. 3 years later, those same people would say, you'll probably make a lot of money. That's awesome, but the earth is warming by 2 degrees. What has your portfolio done about that today? And so it's been interesting to see this sort of juxtaposition, in point of view. What I personally focus on every day is trying to relentlessly, sort of identify companies who are having, sort of a material effect on the status quo in the areas that we care about. I care about things like food safety, and have been interested in finding ways to impact our food supply. I care about things like addiction treatment, and seeing more people heal themselves through superior care models. I care about, I've mentioned it probably 3 or 4 times, I care a lot about water. We've seen in places like Flint, Michigan, how society can devolve, and it's so reckless and irresponsible that through logistics you could have lots of water in some places and none nearly in other places. And so the ability for private capital to take it upon itself to not only prove that you can do well as a business, but also to really solve a problem. That's the emphasis. I think that it doesn't distract me how to put capital into a business like that with what I did yesterday or last year, or what somebody else in the firm did. I know with conviction that finding a way to get clean water to people in Flint is the exact right thing that I should be doing. And it's my job that in being successful to proselytize about that so much that other investment firms, some of whom really don't believe that that's their responsibility, will think to themselves, wow, I can really generate great returns while solving these societal challenges. So for me, I'm laser focused on that goal. And it's, I probably am less interested than I otherwise would be in someone saying, yeah, you put water in Flint, but you're taking a flight to San Francisco, you're sort of wrecking the environment. I'm, the way that I'm able to do the job is in that way. So I'm conscious of those things, and I live my life in that way as best I can. But we're trying to keep the main thing, and invest well in companies that are changing the world and find more impact entrepreneurs who are doing things that we think ought to be supported.
All right, great, thank you. Question up here in the front, and then there was one back there.
Hi, question for both panelists. If for investors who are interested in impact investing and most effective ways of deploying capital, I know Bain does both public equity and private equity. Are you having a greater influence as a private equity investor on companies in the issues of sustainability, ESG? And I guess conversely, would you rather be held publicly or privately in terms of working with investors like that?
You want to go first?
Go ahead.
It's an interesting question. What I would tell you is much of the impact investing field has really been, sort of built on the backs of, sort of family offices, early stage investors, other sort of early stage and venture firms. We were unique, 3 years ago as a sort of private equity firm to take the real sort of buyout methodology, often owning control positions. And there's some prerogatives you get, by owning a control stake in a company, and board seats and influence and all that. So we're demonstrating that the sort of value of that. I think it's important to understand that impact investing as a thesis, has reached a level of scale where we have to be reckoned with. That said, we are a fraction of the overall, world's capital market. So if you were to ask me, is the real interesting cleave between sort of public and private, I might say to you that the real cleave is really between the sort of initiated and not, and really that any of us, all of us, thinking about an investment thesis in this way, it's important for us to demonstrate our success because the trillions of dollars that are on the sidelines still unconvinced that you can really have sort of broad-based societal impact. That's what I'm in. That's what I'm most motivated to move. Are the people who are on the sideline, both capital and companies, which is why I was saying, it's interesting. It's interesting to me to produce, an impact unicorn. I'll probably do well personally when that occurs. But as a human being, with broader concerns than just that, I'd love to see some of the non-impact companies, the unicorns, the really big ones, the ones that were unicorns 50 years ago, are really big companies to do things 5% differently, right? Big oil, for example, to act 5% differently will likely be more important than anything that I'll do in my career. And I understand that effect really well. So part of what we're doing is for the proof point, not just in the way it moves the dial.
Yeah, it's an interesting question. To be candid, we're a private company. I haven't run a publicly traded company before, so I don't know that I actually know the answer to your question. But what I'll say is I think, as a founder-led company, I look at different models out there, right? And so we've seen companies that are private and family-owned or founder-owned, and there is a flexibility, I think, that affords to sort of prioritize things other than simply shareholder return, right? So I think in general, all other things being equal, there is probably a flexibility that being privately held and controlled affords you relative to publicly traded. That being said, with things like the Business Roundtable coming out, with a whole new messaging there, I think there might be a shift coming for publicly traded companies. So.
All right, and the final question is here, this gentleman here, and we're going to do it as a lightning question.
Okay, yeah, quick one, more geographic for Reshma. Why did you found the company in Boston and keep it in Boston as opposed to going like to San Francisco or San Diego or some of the other biotech hubs?
Oh, great question.
Yeah, it's a great question. The trivial answer is that all the founders came out of MIT, and it was easier to stay than it was to leave. I think the real answer, though, is that, from the very beginning at Ginkgo, we were really interested in building, a world-changing technology company, right? We weren't interested in building a company and flipping it to somebody else. And so I think that in Boston, one of the advantages we have is that there's less of a sort of a culture of like hopping between startups, right? Ginkgo's been around 10 years. I see that we have another 10 years ahead of us at least before we sort of really make a dent in our mission. And so I think in Boston, you have folks who are willing to sort of commit for the longer term, make big bets on really and take a swing at really hard problems. And that I think is something that delineates Boston from, say, the Silicon Valley or other hubs.
Brilliant last words. We're going to leave it right there. Thank you, Reshma. Thank you, Greg, so much. And Jürgen, thanks so much for the great intro and Leaps by Bear. So don't miss the Leaps by Bear experience out there, the escape room. It's supposed to be really, really cool. I haven't done it yet, but I've heard great things.